Stocks are at all-time highs, and that usually has investors thinking, should they be buying more, should they be selling, or should they be waiting for the next crash? I'm going to go over exactly what you should be doing when stocks reach an all-time highs, and the answer is going to surprise you. Let's get into it. All right, so should you be buying stocks at an all-time high, right? Should you be selling or waiting for the next crash? I'm going to be going into it really quickly, so if you can, give me a like and subscribe. I really appreciate it. So if you don't know, recently, this is May of 2026, but we've gone up 24%, and just so you know, this video applies throughout time. This is forever. But recently, we've gone up 24% in 38 days in the NASDAQ, right? 24% in 38 days. It started to correct a little bit, and now we passed through all-time highs, and clearly, we've reached all-time highs. Now, right? Investors are now thinking, okay, should I buy? Should I buy right now, or should I just wait, right? What should I do? Well, this is what's happened. This is the performance of the stock market after it reaches a new all-time high. And let me show you. I'm going to go backwards. So we've recently gone up 9%. Right? It's been about 21 days since then. Before that, before the crash, recent little correction we had, we went up for a total of 218 days. And the market, this is the NASDAQ, it went up 17%. Right? Okay, so then we had another correction. Then we went up for another 83 days, 7%. So we've already surpassed that. So if we have one of these corrections for 83 days, we could end up actually going back down, but I'll show you if that's likely or not. And the one before that, 30% up in 219 days. So as you can see, usually after we reach this all-time high, we go through a correction and then we reach that all-time high again, the market tends to continue to go up for, the last 2 out of 3 times, it was over 200 days. And it was 17% and 30%, right? So pretty good. But let's go a little bit before that. Now, I'm not going to go over 2022 and 2023. 2022 was a horrible crash year. It was just disgusting. 2023 was a year of the recovery. So I'm not going over that. But I am going to go over the other times. And this is right before 2020. We had that 2018 correction. Right when we finally hit that all-time high, right? And we actually hit that all-time high, and then we don't kind of look back. We go up for 132 days, and it goes up 26%. 79 days after the next crash, up 79 for 79 days, up 28%, up 60 days, 10%, up 168 days, 20%. As you can see, the market tends to go up regardless if it's at an all-time high, right? And for a decent amount of days, right? I mean, 132 days and 168 days. We have 218 days, and this 21 days is what we're currently in. And then another 219. I mean, these are pretty big runs, right? They're pretty big runs, and they're all 20 almost, right? We have 20, 26, 30, and a 17. Okay. So let's look up the actual stats behind it, right? The data behind it. All right, well, it says historically, buying stocks at all-time highs is not the danger zone many investors fear. In fact, for long-term investors, the cost of waiting for a dip is often higher than cost of buying at a peak. So, since 1950, the S&P 500 average one-year return after hitting an all-time high was 12.7%, right? So, it hits an all-time high 1 year after, whereas the market, on average, 12.7% compared to 12.4% on a non-all-time high day, right? Not much of a difference. The market was higher 1 year later, 70% of the time, regardless of whether you bought at a peak or a random day. So this just goes to show you investing in the stock market is a better gamble than a lot of other gambling out there, right? So you have a 70% chance if you put money on it right now, 70% chance that it's going to be, and those those odds go up and up and up as the years go on. Let's keep going though. Over 3-year and 5-year periods, buying at all-time highs has historically yielded stronger cumulative returns, about 81% over 5 years, than buying on a random day, 75%. So you just get better returns even if you're buying an all-time high. Now, of course, if you're buying at the low and you plan to buy the dips, but if you aren't buying anything while things are at a high, you're probably not going all in and knowing where the bottom is. You're probably going to be scared or fear, right? If you play any emotions and you try to time the market, then you're probably going to time it wrong. So it's better to just continue to invest, know when stocks are at all-time highs. Okay, I'm going to, just kind of make some slow and steady investments. And then when markets start to crash, if you have the cash, deploy. That's it. It's simple. And then frequency, record highs are common. S&P 500 closed an all-time high about 7% of trading days since 1950. So it's typically at an all-time high, right? And you have to think about it. The market's typically going up, right? So as long as we're not in a correction or a crash, the market is typically hitting an all-time high every other day. Almost, it feels like, right? Now, these are the pros and cons for buying at all-time highs. An all-time high often reflects strong earnings and economic growth, which can drive prices even higher, right? So things are going well, okay. Avoiding opportunity costs. So waiting for a 10% pullback can lead to missing out on significant gains. Historically, investors waiting for a sale stayed in cash for hundreds of days while the market rose. So this is why you just don't want to wait for the sale. You can, if you're going to wait for the sale, you got to make sure you're buying at market value as well, right? You're not just waiting for the sale. You have to understand when the sale is going to be there and what to do when the sale happens, but it doesn't mean you wait for the sale. And then the new floors, about 31% of all-time highs eventually become a floor that the market never drops below again, which can be true when you have these big runs, like I was showing you those triangles, it kind of will bounce off that previous top, so the all-time highs are not necessarily at all bad. These are the cons. Psychological stress. So buying at a peak can lead to buyer's remorse if a minor correction occurs shortly after, right? So if you bought, now granted, if you put all your money in 1999, you're kicking yourself, right? Of course, because you just lost everything in the .com. But that's not what you should be doing. Again, if you want to just invest, you want to actually be making money and be an investor and save and do all that, then you got to be doing increments over time. But if you buy at a peak and there is a correction or a crash, you're going to immediately have that stress. Valuation risks. So the NASDAQ and small caps 2000 have historically shown slightly lower median returns after record highs compared to the broader market. So the NASDAQ is just more volatile, but at the same time, it gives you great returns. So that's a little, wish-washy on that one for me. But concentration risks, current records may be driven by a small group of stocks like the Magnificent Seven, which can lead to the broader index more vulnerable if those leaders falter. But again, that hasn't happened yet. This is more of a future thing, right? But what the good thing that has happened lately and that we've noticed, that I've noticed, is that when Microsoft is going down, Meta has gone down, Amazon and Google are going up. When Google was going down last year and people weren't confident and Apple was going down last year, we had Meta, Microsoft, all these other companies going up. So even though, yes, it is driven by a small group of stocks, these stocks aren't always going together, right? When they all go together, oh my gosh, the NASDAQ is going crazy, right? But right now it's not. And think about that, where we are right now, and Meta went down like 10%. I mean, it's gone up, I think, a little bit since then, but Microsoft is not at an all-time high. We have plenty of stocks that are still not even at an all-time high. The market, the actual index is, but there's a lot of individual stocks that are still not even at all-time highs. So these are some strategies for investing at all-time highs. Dollar cost averaging. You invest a fixed amount of money at regular, like every week, every month, And this ensures that you buy more shares when the prices are low and fewer when they are high. So let's say I'm always gonna put in $50 every single, well, I do, I put $50 every single week. What you're gonna do is no matter what, I'm gonna be buying $50 every week. And if I'm buying at a low, I'm gonna be able to buy more stock. If I'm buying at a high, then I can buy less stock, but I'm still buying no matter what. Diversification. Instead of chasing the most popular high flyers, you ensure that your portfolio includes a mix of assets to buffer against volatility, right? You want to have just growth, some value, some dividend, maybe and throw in a little bit of high risk, right? You want to have some high risk in there so you have a little bit of high reward. Nothing that at all can destroy or hurt your portfolio, but just a little bit of risk, right? And then you want to focus on fundamentals. Check if the stocks that are at an all-time high because of the earnings growth, or is it just hype? The expensive valuations can sometimes signal a need for caution. Of course, like something like AMD, it's justified, right? They put out some killer earnings. There's a lot of, stocks out there, even though Palantir is a great company. The stock it overshot itself. The growth was amazing, but it still did not justify the valuation that it had, which is why you're going to see Palantir have struggles to get in my personal opinion, it's going to have some struggles to get to an all-time high for a while. It will get there. It's going to get there eventually, and it's kind of almost in the buy area, to be honest with you, but it might, I think, be in this area, in this 125, 150 area for the next year or so. So I don't want to say it's dead money, but I don't think I'm going to be able to get as much on that as I can on other stocks. But anyway, that's another thing. So to answer the question, yes, it's perfectly okay to invest at all-time highs, right? It's perfectly okay. The math is mathin'. It shows that it is okay. It's actually probably better to invest at all-time highs. As long as you're investing in good stocks, investing in good indexes, it's probably fine. So yeah, that's it. Thanks for watching. Please give a like and subscribe. That was a quick one. I hope that was quick enough and good. So go ahead and start, it's not financial advice, but if you're going to start investing, if you haven't invested anything, start investing now. Who cares if it's at all-time highs? Just start investing little by little. If you have a $100 budget, invest 20 now, invest 20 in a couple weeks. You know what I mean? Just do that kind of stuff because it will work out. And I've always said, if you are aware and prepared for the market, you're never scared, right? So if you have a little bit of cash going in, you're always aware and you're prepared of how the market's going to be, and you just continue to invest, you're never scared. So thank you for watching. I appreciate everybody, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.